So it's in a liquid credit alternative fund. What does this mean? It's unique, so you have to explain it.
So the problem that we start with is, how do you generate yield in a zero interest rate environment? There's no yield in the public markets. So what we look at are the private markets, where we can find credit or credit-like instruments that have contractual claims on cash flow.
And some of the things you're investing in are pretty unique. I mean, I just mentioned the movies, the music, drug patents. I mean, you're really looking far and wide.
Yeah, I mean, broadly speaking, any kind of asset that has a contractual claim on cash flow fits within what we're doing. And we look at royalties, receivables, leases, debt claims. The key is that there's an attractive yield, that there's current income, and that it's underpinned by some kind of asset that we can understand.
Okay, well, that's pretty clear. The current income and asset that is understandable. What gave you the idea to start the funds?
Well, you know, as an investment banker and then as a portfolio manager for a pension fund, what I saw in the marketplace was that following the financial crisis, there was a huge amount of disruption in private credit markets. The non-bank system for financing smaller or less conventional assets or borrowers was disrupted, and in many respects still is very disrupted. And we think that this has created the opportunity to acquire illiquid assets at attractive yields without taking excessive risk.
Josh, how do you find the deals? Because many people might not really see the link between music. Well, music and movies, I suppose you can see the link, but not necessarily to other kinds of IP property.
Yeah, well, we've built a proprietary sourcing network that encompasses relationships that we have across the banking space, the institutional investment space, private investors who are interested in these categories. And we use those sourcing networks to find opportunities that we think are niche, that we think exploit inefficiencies or opaqueness or some kind of barrier to entry in particular markets. So there has to be a special inefficiency that explains why an unusually attractive yield can be available without taking excessive risk.
Can you give us an example, like Bowie Bonds? I mean, that was the first thing that I thought of when I was reading a little bit about what you're doing.
Absolutely. Bowie Bonds were a pioneering securitization of intellectual property. They were bonds issued in 1997 that were backed by the song catalog of David Bowie. What's interesting is that the market has somewhat broadened since then. Now you have private transactions in which those kinds of interests are actually acquired. They're not just subject to having bonds issued, but that you can actually acquire interests in songs, in drugs, in films and television shows. One of the areas we actually have exposure to is films and television shows. Actors, directors, and investors in films may actually have a continuing interest in the long-term revenues of a film. And that can be very, very long-term through television licensing. Those assets can be acquired.
How much has it changed or not that there are more and more seeding businesses in Hollywood? I know companies such as Relativity Media, which are actually basically doing the Moneyball of filmmaking, right? They don't want Titanic. They don't want the film that's going to tank at the box office, but they are looking for that sweet middle spot, and they are willing to fund it based on that.
Well, you're quite right. There was more than $10 billion worth of slate financings, which is what they're called, that were put together in the early 2000s. That has now created a fantastic secondary market for people who are interested in these areas and who have long-term sources of capital. There are many investors who invested in those deals who now want liquidity. And the commonality of what we look for are situations where you can buy an ongoing cash flow stream at what we think is a meaningful discount because someone would prefer to have liquidity up front.
All right, so Josh, what's been the biggest challenge? I mean, what surprised you as you started this fund?
Well, you know, we started it with the impression that the non-bank credit system in this country is somewhat disrupted. And I am amazed at the fact that when I speak to friends of mine in government or in the media, it's not always fully appreciated that that system is still very, very disrupted. There's an enormous focus on recapitalizing banks, on quantitative easing, which increases reserves for banks and brings down their cost of capital. And then we're surprised that that transmission mechanism isn't somehow getting out into the economy of smaller assets and smaller borrowers. But the reality is the non-bank system was even larger than the traditional banking system before the financial crisis, and it's still very disrupted. So I'm just surprised sometimes that that message doesn't seem to be better understood.